So how about I start this video off a tad bit different? This time I will greet you with a hashtag joyant and a jubilant Happy Easter, guys. Happy Easter to you. I hope you're doing well out there. If anything at all, I request one thing from you guys. Take a little time off this Easter. Enjoy the world. Enjoy your life. Spend it with your friends, your family, your loved ones, or whoever you want to spend it. Take some time off. Don't worry about this stock market. It'll be here when you get back on Monday. I remember when I was young, I always wanted the market to stay open. I was like a market junkie. I hated holidays. But as I've gotten older, I've learned to appreciate them. There are times for you to take a deep breath, relax, refocus. It was also the end of the month. So maybe it's a time for you to kind of sit back and think about what you did good last month, what you want to do for the following month here coming up in April, how you want to position yourself. It's also the end of the first quarter. How did you do with your first quarter of trading? So there's a lot of stuff to sit here and be grateful for, even though we're in a really strange world here with the pandemic and many other things. It's still a wonderful time to be alive, and it's a good time for you to reflect on the very important things in your life, the small things that mean the most to you. So please take a small breath, enjoy it. Look back through this first quarter of 2021 and what you did well and what you want to do in this next quarter. So let me welcome everyone again. My name is Doug. This is Trade with Doug. And first off, I just want to kick this video off with this simple statement. I hope you've been listening. That's it. I hope you've been listening, because the stuff we've been talking about in these recent market mutterings, these recent video recaps, had finally come to fruition in a big way. So over the last couple of weeks, we've been really talking mainly about these Qs. Actually, there was a couple of things we were talking about. S&P 4000 and the Qs breaking the upper range. And I felt like, okay, there was a little bit of stalling in that. The time that I thought it was going to take place, it was a little bit delayed, but yet it still came to be. And especially if you go back and you look at Wednesday's video, I was pretty candid about exactly what I thought was happening. I said this market will probably hit 4,000 before the week is over, and these Qs will break. In fact, the video on Wednesday, I said it's time for us to get aggressive. It is time for us to buy the Qs. Look at the tag. It's timestamped. So anyway, guys, it worked out perfectly. I hope you got a piece of that, because the trades work great for us. The stuff I talked about, the spots, the PayCs, I mean, all down the beta list, the Netflix, UPST, Cuervos, Okta, Coop, Teradyne, all of these stocks went crazy on Wednesday and Thursday to finish off a very solid week. And those trades, in fact, guys, made my month 10 times over. So I hope you got a piece of that. And if you didn't, stick around, because we're always looking for that. And that's what I always want to provide in these videos, is actionable alerts, actionable ideas that you can use, not some hindsight bullshit that doesn't matter to you. And I want to teach you the right things to do. So if it's your first time, please come back. If you've been here before, welcome back. So let's kind of talk about these Qs, because during this, these sessions are also about learning and growing together as traders. One thing I was for sure of, now here's the thing, as a trader, you never know what's going to happen and when. But you do know that when some specific event takes place, what's most likely to happen after that. What we had been dealing with here, especially over the last couple of weeks, was a very tight range, not a tight range, a pretty expanded, volatile, sketchy range in the NASDAQ 100s, or the Qs, whatever you want to call them. And mainly this hit the growth stocks and big tech. So we saw retracements in things like Apple. We saw all those big growth stocks. And what I was talking about, Spot, Shop, TTD, Teradyne. I'm just bringing up some names. I mean, there's hundreds of Roku. We saw some pretty hefty selling, and some of those stocks had retraced 30%. Now, obviously, when you're in a situation like that, the first thing is, are we going to go, but is this a correction? And there were some times it looked like it might be. Now, one of my focus also was, it was the very Qs and the growth stocks that brought us out of the post-corona correction. And the question was, would it pull down the S&P and the Dow, because they had been doing very well? Well, finally, it found its pace and its rhythm, and it started to press up here. And it was roughly right there on Wednesday when I said, I'm almost sure now the heat is on. It's had enough time in this area to be sold off, and then you get a really nice breakout. Now, a lot of times we just look at technical analysis and we think it's straightforward. But remember, the key to this, guys, it's nothing special. It's not as difficult as people think. You always want to think of what the market is trying to tell you. So when you're looking at a pattern is some way for you to recognize and interpret it. Consider it like a foreign language. Something is being said, and you must interpret what's being said and then react accordingly. So here's the way I read this, because one trader will look at this as bearish, the other trader will look at it as bullish. So here's what I see. When you move lower like this in a market, okay, it's obviously directional and it's obviously bearish. But there's one thing that we do know, and you learn this through trading, that stocks and assets don't crash from all-time highs. So they're not going to go just straight down, okay? They may appear sometimes to go straight up, but they don't go straight up. I've always said as well, for every reaction, there's an opposite reaction. So what I'm meaning is while these assets are going down and being corrected, at some point, the market will find a common ground where the selling will stop. Now, maybe the selling stops for a short period of time or an extended period of time, but you will find an area, and it's most likely at a pivotal support area. But the point is, it will find a spot to slow its pace down and build what we call base. Traders will call this consolidation, or call it, whatever, resting, whatever you want to call it. But the translation is that the selling is over for the short term, and the asset is taking a breather, and it's deciding what the next move is going to be. Now, during this time, sometimes it's short, and sometimes it's long. So like you go back here and you look at the Qs, for example. Let me just back this out just a little bit and get the other tool for you guys. You look back here and it wasn't that long. It wasn't that long here. It decided it wanted to bounce fairly quick, and that's what it did. Here it was a little bit longer and a little bit more drawn out, and that's okay. The thing is when you're trading inside of this chop, it becomes very, very difficult for a trader on both sides to get clean reads. During that time, stocks become, so it's more of a part of indecision and indecisiveness. So these things are sitting inside of these ranges, and they're just unsure. So the stocks are unsure. That means they'll rip and then they'll sell off. They'll rip and then they'll sell off, or they'll sell off and then they'll rip. They're really undecisive too. But we do know this, at some point it will pick a side. It will either move above that range or below that range, and that second wave of aggressive action will take place. So you will either move below here and the pressure will become to sell this, or you move up here and then the pressure will be to buy it, okay? And that's how I see it. You finally moved above this range, so now it's bullish. Also with that is the common sense part that bears. The people who have been shorting all along this way in this rally have been frustrated and upside down, and they finally get a chance to profit, and this is that's all they get. And after 20 days, the market itself is unable to reclaim and make new lows. So if it was going to go lower, there's been plenty of opportunity to drive it lower. Now, this is the stock market, so Monday this thing can go straight down. I'm not going to say that it can't. But most likely it does not. Most likely this confirms a rally to go up. So many of these stocks we talked about, when I recognized that, I felt it was a good chance. I felt there were things that you had to do. There would be periods that come along during the year that you have to do something. You have to be aggressive. And we were aggressive on spot. This was one we were talking about here. These things were down. A lot of these stocks that I mentioned, ESTC, these things bounced real hardcore. I mean, some of these moves were $20, $25. We talked about NVIDIA. Some of these really making strong moves coming up out of their range. Shop was another one. I mean, these things just went off the handle here. We had PayC and Okta was another one. I mean, just about everything that we mentioned here. I'd have to get my old, let me see if I actually got it over here. I think I got it. Yeah. PayC, ADSK, Trip, Etsy. Etsy was another one. I mean, all of these things really went through the roof. I think the only thing that did not, that I still think is a good buy. By the way, guys, this is how I actually have a piece of scrap paper where I've written down our last few. Here's what we've talked about. I've written them down as I've done them as notes. Coop, Vuzi, PayC, Okta, Fubo, PayPal, Tiger, Spot. What else we got here? Bizun. Yeah, I even talked about Bizun. ADSK trip, you know, so all of these. One I mentioned was Fubo, and I did pick up a position in Fubo. I like Fubo here. It was one of the only ones that's lacking. So this one's here pretty straightforward. Excuse me, just along here, stop out underneath it here. Just looking for a quick bounce on these. So I still want to maintain the aggressive angle. I still think this market is going to go higher. What I would suggest, though, is you can still dig around your list and find quality stocks that have yet to really bounce, you know, like a DraftKings or a Penn. Here are a couple of stocks that still have some adequate room to move to the upside, and see if you can get a great entry on some of them. Also, don't underestimate the power of this rally. So remember, it's been almost an entire month the Qs and the growth stocks have been down, and some of them have suffered, let's say, greatly. Like you look at TTD, this thing was 972 to 660. These are massive. So we don't necessarily have to think we're going to get the standard customary V-shaped rally where we do go back to all-time highs. But some of these are so beat up that we can easily pick up 10 to 15 to 20% on them in a short span of time. So when you see these windows, this is also something about a trader too, is not every market's the same, not every risk therefore needs to be the same. How you position yourself and when you choose to be aggressive and not aggressive really will separate you from being an amateur. So during these times when we say patience waiting on a setup, patience is holding on or waiting for the right setups after 20 days of just back and forth janky wild action. If you don't feel like you have a trade or you don't feel comfortable trading, then don't trade, because you're probably going to lose money, and that's money that you're going to have to make back up. So just kind of remember those things. I'm going to cut this video now because I think I've just yodeled long enough here. Have a happy Easter. But think about some of the lessons that you're learning here. I think this is a great opportunity to highlight lessons for traders, because when people ask me a lot, what was there a defining moment in your career going from an amateur to a professional? And I think a lot of traders look for an aha moment or a light bulb moment, or one thing came out of nowhere that changed your life. And it's, for me, the answer is no. It's a combination of doing a lot of things differently. It's a combination of the little things in trading, choosing when to take trades versus not taking trades, right? How you position yourself risk-wise. When you're in a choppy market, rather than abandoning everything you know and getting aggressive, you should be reclusing. You should be risk off. You should be taking risk away from the table. If you don't read it, right, then don't trade it. If you mistakenly read it, don't worry about it. It's better to me to, you know, wish you were in a position and not have a position and wish you were in a position than to be in a position and wish you were out of it, right? You know what I'm saying? It can be very stressful at times. You also have to have the right position size to hold through some of these drawdowns and be patient. You know, some of these trades I opened up last week, so they didn't start out so well, but I was able to be patient with them. I was able to add to them when I felt the time was right, and I had some really great entries, but I factored all of that stuff before going in. So it was all those little details that make somebody a professional over somebody being an amateur. And to me, I think those things are important. Take them for what they're worth. Other than that, guys, I want you to enjoy your Easter. I want to thank you for the support of this channel. If you like it, give it the thumbs up. Subscribe. Let me know if there's anything I can do for you. Put them down in the description box, any sort of dialogue that you want to have, any videos you would like me to do, any stocks you would like me to talk about. I'd love to hear from the trading community. I want you to enjoy your Easter. Until the market muttering shows up on the weekends, guys, thank you very much for watching. Take care. I said washing, not washing. You can wash too. Thank you for watching. Take care. Talk to you soon.